Starbucks stock is currently trading at $83 a share and is down nearly 29% year to date. So if you're a value dividend investor like me, you might be thinking that now could potentially be a great time to look into buying Starbucks stock. So in this video, we're going to be jumping into my stock valuation spreadsheet to see if we can find Starbucks' intrinsic value. So let's go ahead and jump over to our spreadsheet now. And on this spreadsheet, you can see we have our stock screener, we have a valuation for the Grams valuation, we have a discounted cash flow model, a multiples valuation model, and a dividend discount model, and all of these valuations will roll into our output tab. So let's go ahead and get started with our valuations. If you'd like to be able to download this spreadsheet, then you can head over to my Patreon page at the link in the description. So let's go ahead and plug in Starbucks' stock ticker right here and hit enter. And you can see all this data has automatically filled in, and you can see we're looking at a 250-day change chart. So you can see just how drastic that this stock price has dropped. And a large reason because of this is Howard Schultz recently suspended Starbucks' share repurchase program, which is really not a good sign for the stock, but it could potentially provide a good buying opportunity at a lower price. And so if we come over here and look at Starbucks' dividend yield, we can currently see they're yielding 2.36%, which isn't super high, but when we look at their dividend growth a little bit later in the video, it actually looks much better. So let's go ahead and start with Grams valuation. And Grams valuation was a valuation method invented by Benjamin Graham, who was one of Warren Buffett's mentors. And you can see he laid out a formula to find the intrinsic value of a stock. So essentially what we're going to do is we're going to take the earnings per share for Starbucks, which we can see is 3.71, and we are going to multiply it by the price to earnings of a company with no growth. And then we're going to fill in our growth rate projection for Starbucks, which a lot of analysts think it'll be around 11.5. Then we're going to multiply that by 4.4, which we can see is the average yield of AAA corporate bonds. And once we've done this, we're going to divide by Y, which is the current yield of AAA corporate bonds, which at the time of this video is 3.21. And we plug all of this into our formula, you can see we get an intrinsic value of $94 per share, which is pretty close to what Starbucks is currently trading at. It was a little bit lower today, but let's go ahead and keep moving forward and look at our discounted cash flow analysis. And in order to perform a discounted cash flow analysis, we need to find the growth rate for the future free cash flows of this company. And you can see I plugged in their historical free cash flows for Starbucks, and you can see the growth rate was extremely volatile, going up and down for Starbucks. So that does make it a little bit more difficult to find the expected growth rate for the company. But after doing some research, I saw a few different things that helped me come to a growth rate of about 11%. And something that really stood out to me is if we scroll down here, let's see if I can find it. They recently talked about in this article how quickly they're opening up new stores, and you can see Starbucks opened 1,173 new stores worldwide. In first quarter fiscal 2022, the company opened 484 net new stores worldwide, taking the total store count to 34,000. The company anticipates opening approximately 2,000 net new stores globally in fiscal 2022. So that is a really great sign. We can see Starbucks is still looking to grow very aggressively. And so when I look at industry standards as well, I think a growth rate of 11.5 is a pretty fair growth rate. So I use this growth rate to project for the future free cash flows of the company, and I also calculated the terminal value, which is the value of all the free cash flows past the year 2030. I then took the present value of all of these free cash flows and I added them together. I then took the cash and cash equivalents and added it to the sum of our free cash flows, and I also subtracted out Starbucks' total debt. This allowed me to find the equity value for Starbucks, which I then divided by the number of shares outstanding that Starbucks has, which led me to a discounted cash flow price per share of $104 per share. So let's go ahead and keep moving forward with our multiples valuation. And the idea behind the multiples valuation is we should be able to value a company based on how the market is valuing similar companies using a multiple. And in this situation, I used a price to earnings multiple. So essentially all of our price to earnings multiple is it's going to be our stock price divided by our earnings per share. So depending on how strong a company's earnings per share are, we can value the company. So we can see companies like McDonald's, Yum Brands, Starbucks. Let's go ahead and take that one out. So we're looking at three companies that are similarly priced or similar competitors to Starbucks, and their price to earnings multiple has an average of 25. And so when we apply this average price to earnings multiple and multiply it by Starbucks' earnings per share, we can see that Starbucks' intrinsic value according to our multiples valuation is $93.99 per share. So let's go ahead and look at our dividend discount model. And essentially the idea behind the dividend discount model is we should be able to find the valuation for a stock based off of how much that company pays in dividends and how fast they are growing their dividends. So you can see here, essentially what I've done is I have listed the historical dividend payouts for Starbucks to find out how much they pay yearly. And so we can see exactly how much they are growing the amount they pay in dividends each year. And the average growth rate over the past 4 or 5 years has been 13.13%, which is an extremely high dividend growth rate. Now, that's likely not going to be that high forever, but I think projecting forward a pretty large dividend growth rate of 6.75% is very realistic for this company. That's a really good dividend growth rate. So after I apply a discount rate of about 8.5, we can see our dividend discount model gives us an intrinsic value of $119 per share. Now, anytime a company has a really high dividend growth rate, we do want to jump back over to our stock screener and look at what the payout ratio for this company is. We can see the payout ratio for Starbucks is currently sitting at 49.30. Now, that is a little bit higher than I typically like it, but it's not necessarily a red flag. With as fast as I expect their free cash flows of the company to keep growing, I don't think that's too much of a concern at this point. So let's go ahead and jump over to our output tab. And here on our output tab, we can see all 4 of our valuation models. Graham's valuation at $94 per share, multiples at $93 per share, our discounted cash flow analysis at $104 per share, and our dividend discount model at $119 per share. And so when we average all these together, you can see we come to an intrinsic value of $103 per share, and this company is currently trading at $83 per share. Now, I am a value dividend investor, so it's always really important to apply a margin of safety. So typically I think around a 20 to 30% margin of safety is going to allow you a huge hedge of protection. And so let's go ahead and plug in 20% in this scenario. And you can see based on our 20% margin of safety, our acceptable buy price is $82.52 per share. So the company is currently trading at $83 per share. And because of this, our stock valuation spreadsheet is telling us this is not a stock we should be buying. So it's really right at that mark where it's very close to giving us a buy signal. Now, if you're really focused on just dividend growth, I do think it could make sense to go ahead and buy into this company. But for me personally, I think I am going to wait just a little bit longer to see if this company goes even lower. So I could potentially buy a great company at a really low price where I can see good dividends and good dividend growth. Now, go ahead and let me know what your thoughts are on Starbucks stock in the comments below. If you'd like to be able to download this stock valuation spreadsheet, then you can head over to my Patreon page at the link in the description. So with that being said, thank you guys so much for watching this video, and please don't forget to like and subscribe to the channel.